Today, folks, we're going to talk about probably one of the most historical days we just experienced in the stock market in 2023. The raw devastation this morning was unbelievable, and now we're just seeing this wicked turnaround. It's like the market just relapsed. They need their dopamine kick, and they're like, man, why is everyone selling? Is it really that bad? We got to buy, damn it. Take a look at this. These are my actual accounts. I screenshotted all of them because this is probably the most max pain I've seen in quite a little bit of time here. I mean, we're talking everything from like my Vanguard dividend ETFs because they have large financial exposure, to my Schwab US dividend equity ETF, and the S&P 500 was down quite a bit, but now it's actually turning into the green. But across all the boards, the only thing really holding me up still is some of these foreign stocks like Taiwan Semiconductors, but that's not the only thing that's actually been rallying aggressively. It's these unforeseen cryptocurrencies, a lot more in between. But look at this morning. Look at this.
And that would involve a second round, and then people are going to worry about taxes. So it's not over. I do want to...
I mean, the bank collapse has led to this stir of fear over the weekend. This is kind of how social media perpetuates this insane 2008 rhetoric again, thanks to that bank, the Silicon Valley Bank. But take a look at this, guys, because again, when I looked at this morning, I was like, oh my God, I need to get some cash together. I need to start getting ready to buy. And then I'm like sitting here just watching, and it's just like out of nowhere, it's kind of like it never even happened. I mean, take a look, because some of the growth stocks like Tesla, the S&P are basically flat at this point, but the QQQs just went into the green, and literally almost everything has turned around, especially the dividend stocks. A lot of people just loaded up this morning on two kinds of assets, like security assets, like precious metals. Well, I should say three assets if we're including crypto. Dividend stocks in here. Look at this, J&J, 2%, Southern Company, utilities. Procter & Gamble was up quite a little bit here. Pepsi. I mean, these things are just flying. But look at Bitcoin. It's up 14% today alone. Ethereum's up 12%. And after all the crazy crypto collapses, everyone's like, no longer trust the banks. Let's go trust the crypto market again. Just did a 180. But you guys got to be real focused on your diversification in a market like this. But honestly, the opening of opportunity here is just, it's making my mouth drool, man. So the Vanguard FTSE Canadian High Dividend Yield ETF that I love, I mean, it's got 55% financial exposure. So when something like this happens to the financial sector, everything is going to see some pretty big devastation across the board. But I have a little bit more faith in the Canadian banks than I do the US banks, just because of the historical performance. The Canadian banks have proved resilient through every major crash, but that doesn't stop them from experiencing the volatility, like Royal Bank, which is down 4.8% in the last 5 days. Today alone was down about 2%. Again, a lot of them are rebounding. Toronto Dominion Bank took a big hit, down 8.4%. On the 1 day, down 3%. Look at Bank of Nova Scotia here, now yielding 6.3% in the last 5 days. Again, down 7.3. Canadian Imperial Bank is now paying over 6% again, and it's just wild, right? But what's more impressive here too is the Charles Schwab Corporation, the literal corporation that runs my Schwab US dividend equity ETF, probably took the biggest hit of a lot of the banks in the US. Look at this thing. It is down 29% in the last 5 days and 8.25%, rebounding really heavily off the lows. I mean, it's already up 16%. This is a $90 billion company, and it is trading like a freaking penny stock. You know how insane this is? I mean, so this one is the single worst day in Charles Schwab history for this specific stock here, their common stock. Look at the volatility, just maddening. And just take a look at the headline. Charles Schwab shares head for the worst day ever, dropped 20% as fears of banking crisis deepen. Now, shares slid on Monday as worries about the state of the regional banks deepened in light of the recent collapse of obviously Silicon Valley Bank and crypto-related Signature Bank. Now, the Westlake, Texas-based financial company dropped as much as 23% during Monday's trading. The stock was last down. I mean, why are you recapping the volatility? It's going to be all over the damn place. But take a look. The sharp pullback came even as Schwab reassured shareholders and customers that it isn't seeing significant outflows amid the overall panic of the banking system. Schwab noted that more than 80% of its total bank deposits fall within the insurance limits of the Federal Deposit Insurance Corporation, which is something scary to say. I mean, there's nothing like them saying, oh, look, there's no bank run here. No one's pulling out significant money. But hey, most of the deposits, most of them fall within the insurance limits, FDIC insurance. So it's like, yeah, even if we do go under, guys, a lot of guys are still insured anyway. Like, what kind of statement is that? Our financial performance continues to be strong. The company said in a statement Monday, Schwab is well positioned to navigate the current environment as we continue to serve clients and build the future of modern wealth management. And a lot of people are calling this a compelling entry point. And I honestly think the banks aren't collapsing. I think just, when you look at the Silicon Valley Bank being heavily exposed to venture capital companies and small cap companies that, don't have real cash flow, where there's a lot of fear and a less liquidity in the market, it's no surprise that that bank is it's kind of like, it's kind of like the world of the volatility and risk of crypto, but in the banking sector, right? And just taking a look, they also released a statement literally today talking about their monthly activities just to kind of ease investors' fears. Core new asset brought in for the company by new and existing clients totaled 41.7 billion. Net new assets include mutual funds clearing a total of 40.5 billion. Total client assets were 7.83 trillion. Like, if this company goes under, we be in real trouble here. But like I said, we'll see what happens, guys. It's kind of insane. And taking a look, it did hit the Schwab US Dividend Equity ETF. The sucker's down 5% in the last 5 days. But again, all of them are rebounding, guys. Everyone's seeing this as a buying opportunity. And I'm kind of annoyed because this stuff doesn't last long enough, in my opinion. I should have just been more itchy on my trigger finger because I do have quite a little bit of cash sitting around. But I'm kind of just hesitant waiting to finish up my taxes, as I want to be buying the Schwab US Dividend Equity ETF and my RRSP. So I just got to wait, man. I'm kind of stuck in this play area of, like, I could invest $10,000 if I wanted to here, but I don't want to do it outside of tax advantaged accounts. And it's good that the Schwab US Dividend Equity ETF doesn't have like that crazy huge exposure to the financials. I mean, it's about 20.37% of the entire sector exposure for this ETF. So I mean, taking a look to look at VOO, it seems like still the best ETFs, or some of these, obviously your broad-based market ETFs, because a lot of volatility in some of these core dividend-focused ETFs. So a lot of people seem to avoid some of the broader-based market funds, but again, you're seeing some pretty resilient performance in this volatile market, right? Because obviously a lot of these dividend ETFs have been outperforming over the last year, if you take a look at the broad view. But in the macro, man, this is why I buy a consistent amount of all of these ETFs. I've got VOO, buying SCHD. I'm still looking at maybe adding VCE as just my Canadian global market fund, because it's good to kind of get this baseline. I want like one US broad fund ETF like VOO, and then one US dividend ETF like SCHD. And I'm probably going to replicate that on the Canadian side of the border. So VDY for the dividend side of it, and then VCE for the broad market side of it. They all kind of follow similar suit performance, with VCE versus VDY. Outside of that, I mean, a lot of people that have been a little bit more hesitant on the market buying things like gold are starting to see a bit of a resurgence here. Gold's back over 1,900 an ounce. And I kind of should point this out because I don't like talking about it as much, but I still have crypto exposure. Shakepay, a lot of the Canadian crypto exchanges have still been handing out free Bitcoin every day with promotions we've taken advantage of. I really try to avoid talking about it on this channel because I feel like too many people have lost money. People don't understand crypto. They're just getting scammed. The comments down below are endless scamming comments. So I do try to deter myself from talking about it, but we're still collecting free Bitcoin. I keep sending it over to my fiance's crypto wallet, kind of just condensed it down into hers. And we don't have like a huge crypto exposure, but it was one of those things, like some of the small cap stocks like MindMan we bought back in the day, as a nostalgic thing. I like to just hold a little bit of it. And again, it's not like it's making a significant impact on the portfolio, but this comes back to the point of just diversification across all asset classes, because on days like today, man, it's just wild. I mean, like I said, if you watch the slingshot this morning, we went aggressively red to aggressively green here. And I don't know what it looks like moving forward, but damn it, I will be buying a lot of stock this month. So I pray that it stays down, but I'll pass that question off to you. I'd love to know what you guys think in that comment section below.